Hey everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of our recently closed trade ID number 172 on PAYC, which is Paycom. As you can see, it was a call vertical debit spread within our impulse strategy, and you gotta love this. We returned just under 49% in 0 days. It's kind of comical, but the reason that says 0 days is the way the website records things is because the trade was actually closed less than 24 hours from when it was entered. It shows up as 0 days instead of 1 day. But you can see here that we entered on the 3rd of February and exited on the 4th. But that's the reason that it's reflected as 0. So looking at the particulars here on the entry there on the 3rd of February, you can see we had something interesting here. We looked at the DMI down here, and you can see that the ADX was above the top directional indicator. In this case, it's the positive directional indicator, or the green line. And when that occurs in the world of the DMI, it tells you that, hey, the trend is strong, but it's maturing, and you could be nearing the end of the run. Looking up here in the chart, we were in a wave 5 of a 5-wave Elliott wave pattern. We were sitting right on top of the 100% extension, which meant that it looked like we were going to look to head towards the next level, 161.8. So with that ADX showing strength, just kind of consolidating right on top of that fib extension, we made the decision to go ahead and send this out as an alert to our subscribers, and it worked out extremely well. The very next day, as you can see, we got a pop. Now, there was an earnings report the following day, and that comes up a lot. A question our subscribers talk about trading through earnings reports and what my thoughts are, so I just thought I would share them with everybody, and that's that if you have a great pattern, I don't mind holding a position through the earnings report. It just seems like more often than not every time, nothing works 100% of the time, but more often than not, when the earnings come out, the stock moves the way the technicals were already showing us it was going to. But there's always a wild card there. So in this case, we got a big gap to the upside the next day, big move up and bumped right in that 138.2% fib level. Not normally as strong as the 161.8, but it's a fib level all the same. Fibonacci levels act as support and resistance, and we come down here and look, and now we've got an even greater extreme here on the ADX. It's moving up towards 50, which is really high. Once you get above 40, you start to take note of it. So with this move up here towards 50 with that big update, it gave us the opportunity to take a nice gain in 1 day and avoid the earnings report and avoid any uncertainty there. So that was the thought process, and go ahead and closing the position out. And as you can see, that was the right move, because the next day, earnings, we opened higher, but fell on earnings and then gapped down. So it's closed significantly lower than where we exited. So taking that 1 day quick gain was the right move. And again, just under 49% in 1 day for our subscribers. I hope you found that informative, and look forward to talking to you again next time. Take care, everybody.